questions and all questions you may have as I kind of go through this. So as kind of was introduced, I'm the Community Investment Outreach Partner for the Federal Home Loan Bank of Indianapolis, but I'm Michigan-based, and I'm actually here in Detroit. So I was hired last April, right after the pandemic really kind of settled in here in the state of Michigan. So it's an interesting time to transition jobs, but I will say it's been a great experience and really happy to be here. So I'm going to just dig right in. So what we're going to cover today, I just want to kind of give you a brief overview. So I think everyone's pretty familiar with the Federal Home Loan Bank system that's on this call. So I'm going to go over that very quickly. But then I'm going to really start digging into the community investment programs that are specific to our bank, giving kind of a quick overview as well as some data around what's happening here in Michigan. As well as opportunities. And I think kind of based on the data that I'll be providing, I'm going to just kind of give a quick call to action for all of you to really consider getting involved in either our programs, or if you're a member of a different Federal Home Loan Bank, to consider getting involved in those because we want to see as much activity and grant dollar investment as we possibly can see here in the state of Michigan. So with that, very quick overview again. The Federal Home Loan Bank is a government-sponsored enterprise. As you know, it's a wholesale supplier of lendable funds, cooperatively owned by its members. Really kind of works like a credit union. That's kind of what I've heard other colleagues of mine kind of describe it as. The Federal Home Loan Bank of Indianapolis is just one of 11 banks, and you'll see kind of in that map, you'll see the Michigan and Indiana states highlighted in blue. That is our district. So we have Michigan and Indiana. And then in terms of the membership, we of course have quite a few of you on the line with us here today. Our banks, our credit unions, insurance companies, and our CDFIs. And as you probably know, in order to be a member of our bank and not Chicago or Atlanta, you are required to have a charter here in one of our two states. So we have 364 members in total, 200 of which are in Michigan. So we do hold the majority of members here in Michigan, a slight majority. So moving into our community investment programs, as you may know, 10% of the bank's revenue is returned back into the community in the form of grants. So let's say, for instance, we generate $150 million in revenue. Simple math, $15 million will be returned back into the district through these grant programs. We do kind of go above and beyond, above that requirement, and we do have some voluntary programs as well, which we'll be covering. So the four major programs that we have and that I'll be covering are the Affordable Housing Program. That's really our flagship program, one that people probably know the most inside and outside of the bank. We also have our home ownership and home repair grant programs, and an Elevate kind of small business support program, which is our voluntary program, as well as a community investment program product that's available to our members. So really, as you kind of see in the bottom of that screen, highlighting the fact that all programs require member participation. And that really just means that partnerships are really key here in making sure that these programs work both for the member, for the end user, and for the bank. So moving into that flagship program, for anyone that does affordable housing development, you'll likely know of this program. There are few places to turn to for subsidy in making these deals work. As you know, construction prices just skyrocket, rents may remain stagnant. It is kind of, we're seeing more and more gaps coming with these projects. So developers have a few places to turn, right? They have their local and state home and CDBG dollars. Of course, they have tax credits if they're able to get a tax credit allocation in what has become largely a really competitive process. Some municipalities may have a housing trust fund dollar, we do here in Detroit, but outside of those, really the next place to turn, or maybe the first place to turn, is our AHP program. So this is really meant to fill the gap between the cost of construction and acquisition versus the sources of income that a developer may turn to. So just to kind of give a quick overview, so we provide gap financing up to $500,000 for both rental and homeownership program developments. Again, it's a competitive program. We do ask that any AHP assisted unit be at 80% AMI or below. And really just a kind of a threshold to remember is that a minimum of 20% of the units need to be at 50% AMI. So let's say you're working with a development team, considering maybe AHP could be a good option for you. Maybe just think through that threshold piece right out of the gate, and that can kind of help understand if this is going to be an eligible project. So the uses of our dollars are quite flexible. You can use them towards hard costs, soft costs, acquisition. And then in return, and very similar to the other subsidy programs out there, we do ask for a 15-year affordability period for rentals and a 5-year affordability period for homeowners. So we haven't publicly released our funding for the 2021 year, but as a point of reference, we had just over $11 million in 2020 available. The cycle is very similar from year to year, and you're going to kind of see a pattern with our grant programs that were really active in the summer months. So the pre-application rounds will be open in June, and then a final application will be due at the end of July. So members, financial institutions play a critical role here. They're the ones that are working with the development team to understand the financial feasibility of the project, if the site's suitable, kind of taking that high kind of overview of the project, and the member may or may not have financial participation in the project. We've seen it happen both ways, and I'll kind of dig into that a little bit further along into this presentation. But the members are really here to kind of be the go-between between our bank and the development team. So they're the ones reviewing the project. They're the ones that will be reviewing the final application. If there is an award that is allocated, the member would be required to record the retention agreement, review disbursement requests, and oversee compliance. So it can be a little bit of a heavier lift compared to our other grant programs, but this is a much higher dollar amount. And you're working with development teams that are very, very familiar with compliance because they have, as I mentioned, so many layers of subsidy that require regulatory different kind of tasks. So they're very familiar with this. So I'm going to go into some data here. So I ran some numbers, and as I mentioned, Michigan has more than Indiana in terms of financial institutions that are our members. And you see some massive figures here on this slide. $17 million have gone into the state of Michigan since 2013 through our AHP program, which is a huge number. It means many people worked really hard to get those dollars into the state, and some of you are probably on this call. But when you look at Indiana, they have been able to receive $64 million of AHP. So the contrast between these two numbers is pretty stark, right? And I don't think any one of us on this call would think that, of course, there's not more people in Indiana. I don't think that there's more need. So kind of when we look at these two numbers, we just see that we need to build up our member capacity here in Michigan and really have a lot of targeted outreach to kind of turn this number around, because I think everyone on this call would agree that we'd love to see this number equally distributed between our two states, because we live and we work in this state. So kind of with that, just moving into what we've been up to here in Michigan. You know, we have kind of a multi-pronged approach. We're working with both developers, we're working with key partners, and of course, we're working with members. So with developers, we're meeting with a wide variety of development teams, some that have a statewide presence, some that have a national presence, some that are focused on certain regions of the state, and really understanding kind of their perspective around AHP, if they find that it's, you know, too competitive for Michigan to really compete, and maybe there's a narrative here that we can start changing. We did conduct a focus group with developers here in Detroit, because Detroit hadn't seen an award since 2014. And I will say we turned that around last year, and they received 4 awards. So we're starting to gain a lot of traction here. But we wanted to really sit down with them and understand challenges that are specific to the market and how we can start kind of shifting our programs or our outreach to make a difference here. We're also working very actively with our local municipalities, understanding kind of what projects are in their pipeline that have a really demonstrated need and could qualify, and really following up with those development teams, understanding the projects, understanding if they have opportunities for financial participation, and if we can link them up with our members. We're also, I'm working very closely with the Michigan State Housing Development Authority. We're really kind of taking on the same approach. We're kind of sitting there looking at their pipeline, understanding where the major needs and gaps are, and seeing if there's any opportunity for our members to play a role, whether it's financially participating or really just sponsoring an AHP application. And really kind of the same concept and strategy applied to the Michigan Economic Development Corporation, which, as you may or may not know, have a good amount of funding available for commercial space, but oftentimes those projects are mixed use and have a housing component. So I've put 2 members here on this slide, and not to give them more props than any other, but I wanted to show that there is a very wide spectrum of members that are participating in this program. It goes from some of our biggest borrowers down to some of our smallest credit unions. So it's not to say that only the big banks can play a role here. We're seeing, you know, banks of many different sizes really starting to step up and actively participate and dip their toe into this program. So with that, I actually wanted to go into a couple of community bank examples. So just to kind of demonstrate how different this program can start to form within each bank, I wanted to highlight Chelsea State Bank because it's an interesting kind of story. There was an internal champion at a different bank altogether that had been acquired by Chelsea State Bank. And he, at the time that he was at a former bank, really developed a strong partnership with one affordable housing developer that's very active in Washtenaw County. And it kind of formed in a way where there's this loyalty where this developer really kind of turns to him for both lending opportunities, but also knowing that each and every time he will be willing to submit an HP application, which then adds on another $500,000 in grants. And looking at just Washtenaw County alone, because of this relationship, $3 million have gone into the county because of this one relationship that was formed and the loyalty that both kind of showcased to one another. And then kind of just to show a different kind of story altogether, Independent Bank, they kind of raised the flag for me as I was looking through applications last year, because they submitted their very first AHP application in a number of years. And it's because one developer that had an existing relationship with the bank asked for them to submit an AHP application on their behalf. They were successful, and they did receive money for a project based in Traverse City. And because of that, I reached out to their commercial lending team to understand if they wanted to expand their presence here in Michigan, because I do know that they're very active in our mortgage market here in Detroit. So had a really good conversation with them, and they do absolutely want to expand into Detroit. And so these are things that we're learning only because we're reaching out actively to understand. But that gives me the opportunity when I meet with development teams to really kind of, if they have financial participation opportunities, and even if they don't, kind of just mentioning independent bank as a possibility for them to turn to. And we're seeing a lot of traction because of that. So moving on, and kind of just digging a little bit deeper into the different strategies around how we can build more capacity here in Michigan and start getting more and more dollars into this state. So again, I kind of mentioned a couple strategies that we've been taking. We're trying to do our research, right? So you see this map on the right-hand side, and then there's just kind of this very simple map of showing a walking distance between one point and another. And that's because we had a project based in Detroit that really wanted to get into the HP rounds, but didn't have a relationship with our member of ours. They didn't have financial opportunity either. So it makes it very hard to talk a member into taking on an HP application that doesn't have a financial stake in the project. But what we did notice is that there was a member of ours that had a branch within walking distance, and that they had kind of shown their interest in the affordable housing market here in Detroit through kind of memberships that they're a part of. So we reached out to that member and kind of showed this exact map to them to kind of say, listen, your branch is right here. You obviously have a pretty invested stake here in this specific community. Would you be willing to meet with this development team? And it ended up that they took on the project and they did receive an award. And really, the member took it on not because there was a financial opportunity in the project, but that they wanted to form a relationship with this development team for future business opportunity. So one thing that we've learned, and as I talk to developers and financial institutions, one thing that's really key for developers is to really have their pitch ready. To demonstrate that they have the experience, especially as you consider kind of the heavy lift that it can be, or seemingly can be, for members to submit these AHP applications, and really to understand that this partnership can lead to bigger business opportunities. And I'll say the same for financial institutions. I have talked to a number of developers that really are kind of interviewing the member bank just as much as they're getting interviewed. They want to understand that there's affordable housing knowledge and compliance knowledge that the financial institution can bring. And that's really to minimize just the headache around closing these deals and working through the construction draw process and then into the compliance period. So really, I guess, also the strategy that I've seen take place and kind of help move these partnerships along is that financial institutions are trying to look at the bigger picture and form these partnerships through AHP, and then hopefully get financial opportunities down the line. So moving on. So I think I've mentioned quite a few of these along the way here, but there's a multitude of benefits that partners like you can really receive in being part of these programs, or this program specifically. Again, I've mentioned it, developing partnerships with development teams, opening doors for future business opportunities, potential to obtain CRA credit, you're addressing affordability in your local communities. You're also able to promote your investment activity. If you did receive an award, you can shout it from the rooftops. That's fine, and we want you to do so. But one thing we've really seen take place, or kind of from survey feedback, we're realizing that a lot of the drive here to participate in these programs is really to fulfill an internal mission. So you'd think that CRA would really rise to the top, and that's not necessarily the case as to why even banks are kind of participating in these projects. So moving on into our home ownership programs. So these are our non-competitive programs in the sense that if you have a complete application and you submit it, they will receive funding. It's not scored against another application. And these are our, home ownership kind of based programs. So we have a down payment assistance program, and despite whether or not a member provides the loan on the transaction, they can receive up to $5,000 in down payment assistance. We ask for a 5-year affordability period. We also have 2 repair programs. And really one is just our general home repair program. And these are for really kind of critical need repairs around, roof, HVAC, energy conservation repairs. And then we have another kind of separate set aside for accessibility modification repairs. So this is specific to seniors and or residents with permanent disabilities. Again, I have a fund amount listed for 2020, and we'll be publicly announcing what the 2021 figures look like. The cycle is pretty similar to HP in that it opens in the spring, but it's different in the sense that we have a pot of money, and depending on how quickly members across 2 states draw down these funds, it could run out in 60 days to 90 days. So it's a pretty quick turnaround. But members play a critical role in the sense that they're submitting the final application to us, and they're working with their residents or nonprofits in the local area. And so I'm going to speed it up because I'm noticing that I'm running out of time here. In terms of Michigan activity, different to AHP, we're seeing a better split between Indiana and Michigan. We just in 2020 drew down $2.6 million here for Michigan residents to purchase their homes and fix their homes. And there are not many grant programs out there like this. This is a very unique program, so it's very popular, and so many residents here in Detroit know about it, and probably very much the same across the state. And what we're noticing is members really working with nonprofits is a key kind of success model that we've seen work well. So I'm listing kind of an assortment of members here to kind of show just how many different parts of the state are working on this program. And I will kind of just move on here. So similar, I'm not going to read this off for you, but there is a multitude of benefits in terms of developing partnerships with customers, opening doors for future business opportunities, fulfilling that mission, potentially obtaining that CRA credit, and really helping the local community. So in terms of our kind of voluntary program, so again, we're required to return 10% of our revenue back into the form of investment. But Elevate is going above and beyond for us. We, as a bank, recognize the critical need for support here in small businesses across the state of Michigan and Indiana. And this is one that I really don't have to say it, but I will, is such a critical need right now, given the impacts of the pandemic and how much small businesses are really suffering. So this is a really popular program. And again, I'm going to say there aren't many programs quite like it here in the state of Michigan or Indiana. The qualifications to participate are pretty flexible. You can't generate more than $1 million in revenue, but you have to be in business for more than 1 year. And in terms of the flexibility of the dollars, it can go towards the acquisition of space, equipment, training, but also something that we kind of pivoted on last year is to incorporate working capital into the use of these dollars. We do have a cap of how much the dollars can be used towards working capital, but it is a significant amount. This is competitive, so we do look for how established a business plan is submitted with alongside the application. If it's minority or women-led, if it's in a low income census tract, you'll receive more points. And if there's a significant focus on workforce training. So we have $500,000 available last year. We expect to see a similar number for this year. Applications are due in mid-May, award announcements in August. And again, members are really the ones driving this process. working alongside whether it's their customers, existing small business customers and borrowers, or new ones. And we're seeing a lot of that. We're seeing small businesses reaching out to members, and members are saying, look, I'll help you on this application. And I will stress the application itself is very minimal compared to the amount of funding that these small businesses are receiving. It's 2 pages long, and the small business is really the one kind of driving the application process. So just moving in to the Michigan activity that we're seeing. Again, I will say that there's it's not quite as stark of a contrast between Indiana and Michigan. Michigan has done a really good job of drawing down dollars here in the state. Just, since its inception, we've seen just under 600,000 come into the state of Michigan for small businesses. And I'm not going to read off this list of members, but again, showing kind of just the variety of members that are active in this program, and so many more, but just kind of showing the range of banks and the range of geographic locations. And then again, I'm not going to list through these, but there's a multitude of benefits very similar to our other grant programs. But one I'll kind of highlight is that this really is, focusing on relief to the pandemic impacts that we've seen. So the last product that I'll just quickly cover is our community investment program. This is available to our members. It's our lowest cost funding available to our members, and there's a wide range of how much you can borrow from us. The terms are very flexible, up to a 20-year term and a 30-year AM. Same type of collateral and activity-based staff requirements that our regular advances require. And the projects that qualify you can really qualify in so many different ways. I have to say this is a very easy way of qualifying, in that it could be done by location where you're lending the money, as long as the census tract is 100% AMI or below, or different kind of investment zones. If it's a small business as defined by the SBA, or if the housing has 51% of the units at or above, or sorry, below 115% of AMI, which coming from the affordable housing industry is a very loose AMI restriction. So I guess with that, the last thing I'll say is that we want to figure out how to increase investment here in Michigan. We're making a lot of strides. We have a lot of different strategies. We hope that you can learn from us more if you're a member. And even if you're not, I think we've really understood in this last year that non-members also play a really critical role. We've kind of identified so many different ways that we can work with non-members in initiatives that kind of overlap with our mission. And I won't go into those just because we don't have much time here. But with that, I'll just say thank you so much for taking your morning and listening to me. I know that was a lot of information that we just covered, but thanks again.
Anna, thank you. It was a lot of information, but a lot of great information. You have a few minutes for questions?
Yes, absolutely.
Okay. I've gotten one that's coming from the chat that is more in general, and that is wondering if the bank has determined if you're going to have an outreach program this year in person, or if it will be virtually.
Yeah, okay. So that's a good question. One that we've had several discussions around. So we do, this person might be referring to our workshops that we hold every year that are kind of a half day long and really kind of give an opportunity for members to see one another, but also to kind of make connections with development teams and others. Unfortunately, we know that we're not going to be able to do that in the time frame that we want. So we do have, and I'm actually going to just go back up to the slide. We do have our community investment workshops. We've broken them up to make the segments much smaller and a little more digestible since we're constantly all on Zoom. So we have about an hour and a half segment of time for each of our programs. And I'm happy to send that out to Stephanie, who could maybe send it out to our attendees here today. But yes, I definitely kind of encourage that people join these workshops and really learn a little bit more, because there's so much information around these programs, and it's helpful to kind of just get as much information as you can.
Absolutely, that's great. Share that with Stephanie, and we'll be sure and include it in our bank beat. And then as the summer goes on, if you're able to hold the August meeting, let us know, and we'll share that as well as appropriate. Are there questions for Anna this morning? And it's fine to speak up because I can't see everyone. Just a few of the, yes, sir.
Yeah, I have a question. Anna, thank you. Great presentation. Welcome to the Federal Home Loan Bank of Indianapolis. I don't think you'll get any argument from any of us that affordable housing, it's valuable, it's important. But for those of us smaller institutions, one of the things we always have to look at is, does it count for CRA credit? And it doesn't always do so. For a small institution rules, essentially it's got to be in the area to directly benefit the market area that the bank is located in to get the usable credit. And with a 15-year mandatory requirement for monitoring, that's a tough sell sometimes. Now we've participated in a few projects, and the benefits are not just for CRA credit, but there are many as you listed before. Under the new CRA rules for OCC shops, supposedly credit is going to be given no matter where the project is. So I'm hopeful that will help even out the disparity and get some more participation from those of us in Michigan. But those are realistic issues that we've dealt with that in some cases have prevented us from jumping into some of these things. Do you have any comments on that? Again, this is so far the CRA change is just an OCC related change because not all of the agencies got on board with that particular effort by the comptroller of the currency, which was that guy was maybe 2 or 3 comptrollers ago. They're changing quickly. Any comments along those lines?
Yeah, no, I absolutely understand the challenge there, and that's actually good. That's good information to know. I didn't know that, and I think that will actually make a big difference. I guess I will say that when you hear the kind of the 15-year compliance period, it does seem completely overwhelming, especially for smaller institutions. But there have been changes in the regulation in that such a huge portion of our projects do receive tax credits. And if there is a state agency that's involved in compliance, there now has been a shift to where the AHP dollars can much more heavily rely on the state agency's compliance efforts. So that's kind of reduced a good amount of the lifting that members have to do. And I'll pass it over to Mary Beth to see if she has anything else she'd like to add around that.
Yes, thank you. And thanks for making that comment, Bill. And yeah, we are aware currently a lot of the willingness to participate relates to the location of our financial institution members and where the property is located. So that, that's something that Anna we're working really hard in getting some members involved. We certainly appreciate the participation that you have had in the past, and we do keep an eye on the CRA and appreciate you pointing that out, that there may be some flexibility about your service area or how that's defined, or just assisting with the relationship that you have and helping out affordable housing, that's good business and that can be recognized, hopefully. And things will be so heavily driven by the banking regulators. We're highly regulated as well. A lot of what we have to do, a lot of the parameters that Anna described this morning have to do with requirements that we have from our regulators. So just working on those partnerships, that feedback is certainly helpful. And other ways that we can partner together, we certainly appreciate that dialogue and that feedback.
Yeah, Mary Beth, thanks. Just circle back a little bit. I didn't mean to suggest that the 15-year monitoring period was a deal killer. It's certainly not, because if you deal with a reputable developer, they have the infrastructure and they have the talent on board to take care of all that monitoring. You just need to make sure that it's done. It's just another thing that it just sounds like a big requirement when really it's certainly important, but it's not. The other thing I will say that of the projects we've participated in, I can't say enough good things about the staff at the Federal Home Loan Bank of Indianapolis. I'm a little biased, but they do a wonderful job. The resources are tremendous. They'll do a lot of the lifting, pretty much a lot of the lifting. But it's a very great, it's a great partnership, and you guys do a wonderful job.
Thank you.
Well, thank you, Bill.
Are there
Anna,
other
good morning. Sorry, Rand, and just you had asked, or you had mentioned at the beginning when you were talking about a affordable housing program that you partner a lot with the MEDC and MISTA. We've been in conversations. We obviously work closely with them. Are you guys, and is the Federal Home Loan Bank involved in the kind of the start off of this statewide housing program that they're working on right now? And if not, can I help tie you guys into that?
Yeah, I'm not sure which program you're referring to, but absolutely, that would be fantastic.
Yeah. We talked to MISTA last Friday, or I'm sorry, to MEDC last Friday also about just looking and projecting ahead with the changes in anticipated use of commercial space, whether it's retail or other office, that there may be opportunities to convert current things into multi-use residential office type of communities across the state, and that's probably something that we need to look at in the long term, but be ready to go pretty quickly if there are developers that are interested in that kind of work. I think that would do some good, provide some great benefit on both sides of the equation.
Absolutely.
So I'll follow up with you. Thank you.
Okay, thank you so much.
Thank you, Patricia. Are there other questions or points for Anna or Mary Beth? If not, Anna, Mary Beth, thank you for being with us. Great presentation, great information. We'll work with you to share that out more broadly as well. We're grateful for your time this morning, for your expertise, for our relationship with the bank, and for everyone on the call. Thank you for being on here as well. Next week, Elizabeth Hertel, Director of the Department of Health and Human Services, will be on, so we'll look forward to meeting with Director Hertel. Have a great Tuesday. Have a great week, everyone. Stay safe and well.
Thank you so much.
Thank you.